introduction of our own Vice President, Devin Thorpe, who's in the background. You may not hear or see him today, but he's always there. Thank you, Devin, as always, for making this happen. Today, we're happy to host a very important gentleman, Peter Duggan, who's the Senior Vice President of Computershare. I'll talk a little bit more about that in a moment. But first, we'd like to prep people on what the CfPA is and what we do for you. So the CfPA was formed as an organization. We are a 501c6. This is a trade group, an industry trade group, designed to kind of perform in two functions. One, we are an advocate for the alternative finance marketplace in a space we call crowdfunding, which was created as a result, legally created as a result of the Jobs Act of 2012, of which the founders of the CfPA had a hand in crafting. That said, we've been on a long journey over these last almost 8 years to helping investors find entrepreneurs and small businesses, and likewise help people who weren't previously qualified to invest in securitized assets the opportunity to buy equity and shares of companies that they probably wouldn't have seen until they were already on the marketplace through stock markets, in other words. So that's why we're here, and we're all volunteer-driven organization, and in our 8th year, we have existed without corporate donations, without massive solicitation efforts, no lobbying in Congress, for instance. And so participants in our community include also service providers, which help connect entrepreneurs and small businesses in ways that you're probably familiar with, accountants, lawyers, et cetera. Well, today we're with Computershare, which is a transfer agent, as I understand it. Peter will get into a little bit more description on what Computershare does specifically, but it's also worth noting that Computershare has been a very generous contributor to CfPA's existence and our ability to promote and produce events. As a sponsor, we thank Computershare and Peter specifically for spearheading that effort and helping us reach more people in the alternative finance marketplace with our content and our events. So thank you, Peter, for that. And with that, I will say one more time that the CfPA works for the success of every crowdfund raiser and their supporters by providing education, resources, and assistance to all stakeholders in the crowdfunding community. That's what we do, and that's what we're about. So, Peter, I will introduce you by giving a canned question, which is we often focus on the raise itself. We in the community, that's kind of the goal, right? But on the investor side, there's also issues that pertain to managing companies. So I'll let you take it over and talk a little bit about what managing investors is and how it pertains to future value.
Great. Thanks, Scott, and thank you to the CfPA. Appreciate having the opportunity. You did say before correctly, Computershare is a registered transfer agent. We're actually an SEC registered transfer agent. So transfer agents are governed by the Securities and Exchange Commission, and you do need to register with the SEC. Not all record keepers of private equity need to be or are SEC registered, and we'll talk about why and the differences between them. But Computershare also offers a software as a service product for private companies that don't want a full outsourcing to a registered transfer agent and want to keep their records themselves. And we'll talk a little bit about sort of pros and cons of the various forms of record keeping. So as I move down now to the next slide, looks like it's a little slow. Doesn't want to move to the next slide. You know what, maybe it's, I'll move on, even though you're not seeing it on there. It might just be slow to move. In terms of what Computershare is and isn't in the process of equity crowdfunding, let me tell you some of the things we're not, right? So the issuer who raises the capital, the portal that helps introduce the investors to that issuer that's looking to raise the capital, the marketing firm that helps package the story of that issuer for the potential investors, or the provider that once an investor is interested in, they're on the portal and they want to buy equity, there's usually an Invest Now button. And behind that is the technology that would allow the investor to put in their banking instructions, indicate how many shares they want to buy. That entity would be providing the suitability check to make sure that that investor is suitable for the investment. All of that is not what we are, but a record keeper takes over after the raise is successful and those investors are now real live investors. The money has moved to the issuing company and the investors are valid investors. That's when the record keeper takes over. What is it that the investor or the record keeper does? Well, the investor record keeper will track the details. What's the name of the investor? What account type do they have? Are they an individual? Are they a joint tenant with rights of survivorship? Is it a corporate account? Is it a minor account? Is it a custodial account? Is it an IRA account? And I go into this level of detail because as companies need to decide, issuers need to decide whether they're going to do this themselves, use software, or outsource, it's a little more complex than just name and address. Also have to track the purchase date, the cost basis for tax reporting purposes, and then do all the updates to those various data fields I just mentioned. So as people move and their address changes, as their banking details change, all of that ongoing maintenance is the responsibility of the record keeper. Now, it's not that often that a startup or a company in early stage that's doing a crowdfunding will pay a dividend, but to the extent the company does want to do any form of a distribution of money, the company will be responsible, if they don't outsource to a third party, of making those payments, and that might be payments by check, ACH, or wire, making sure that they issue a 1099 at year end, and then filing the tax forms with the IRS. Additionally, equity record keeping involves state escheatment compliance. So when shares are deemed abandoned, depending on where the investor lives, the role of the record keeper is to ensure that that property is turned over to the respective state and turned over according to their state abandoned property rules and timeframes. And so this is another function that a record keeper provides that an issuer needs to think about when making the decision as to whether or not they want to outsource or want to keep those records themselves. And I apologize because it looks like the slides are not advancing. So I'll just...
Peter, if I can interrupt 1 second,
yeah.
You might have luck with that. I think you might be clicking on the actual Zoom window of your presentation when you need to bring your PowerPoint presentation to the forefront. Try clicking on the PowerPoint itself, not the picture you see in Zoom. There you go.
Thank you.
Sure.
Excellent. Okay, so that was the previous slide.
Okay.
Obviously, this probably has happened before. So here's some questions an issuer needs to ask themselves. There's three ways that they can record keep. Do it yourself, a spreadsheet, paper records, carve it in stone tablets, use software to help you do that, or outsource it to someone like a registered transfer agent or third party that will do it for you. And I liken this to when you do your taxes, you can do it yourself by getting the forms, go to the post office or wherever you get your tax forms and fill it out with a pencil. You can use software like TurboTax or H&R Block, or you can use an accountant and they do it all for you and you go off on vacation. So let's go through the three options in terms of issues to consider. The first is do it yourself. Well, if an issuer is looking to raise more than $20 million in a 12-month period, they're going to be out of the tier 1 and into the tier 2 of Reg A, which will require a registered transfer agent unless they're offering it in a single state. But if they want the exemption from the blue sky laws, they're going to need a registered transfer agent. So if you're under that threshold and you want to do it yourself, that's fine. Over that threshold, you're not going to be able to do it. Another thing an issuer has to consider is data security and business continuity. So if you're keeping it on a spreadsheet, the data that you will track with regard to your investors would include social security number, which is personal information, which if anyone's familiar with the various hacking and issues at a variety of providers, including Target was the big one a number of years ago, but there have been many since, including Experian. Social security number is something you absolutely have to protect. And so if you've got it sitting on a spreadsheet on someone's PC and you're a small startup and you work out of the garage, you really have to think about the data security. And if for some reason the systems go down, what is your ability to actually bring them back up from a business continuity standpoint? So if you want to do it yourself, you just really need to make sure that data is protected and you can pull it back up when need be. If you make a mistake, you own it. So there's no third party helping you. If you put in 1,000 shares and it should have been 100 shares, that's what's going to be in your records. Really important that, and if you then send out some materials to an investor and letting them know that they own 1,000 shares instead of 100 shares and you've made the mistake, you could have some significant liability. Also, if you do it yourself, you're interacting with the investors. There may only be 75 or 100 of them but when they have a question, they're going to be calling you. And as an issuer, if you're a startup and you're trying to focus on growing your business, may not be the biggest priority for you to want to have to answer questions from investors about anything from I've changed my address, you need to update it, why are my shares, why can I not see my shares? If you issue stock certificates and someone says I've lost my certificate, all of that type of interaction has to be done. If you do it yourself, has to be done by the company. And as an issuer, you're probably not familiar with all of the legal requirements. So when someone dies who's an investor in your company, making sure that you properly assign the shares over to the beneficiaries, depending on whether the person dies there's a probated will or no probated will. If there's a divorce and a contentious divorce situation, the last thing you want to be doing as an issuer is once you give those shares to another party, there could be significant legal consequences to you if you give it to the wrong party. Now, granted, your stock is not trading, so you don't have the issue of immediately upon transferring it, if you transfer it incorrectly, having that person sell it and no recourse for getting it back. But still, once you make a transfer as a record keeper, you own and have to ensure that you know all the requirements, whether they're the custodial requirements, the Uniform Gift to Minors Act, etc. You also have to be responsible for tripping the 2,000 shareholder rule and becoming a reporting company. So up to 2,000 shareholders, you can stay non-reporting. This is something that record keepers and transfer agents do on behalf of issuers. If you are doing your record keeping yourself, you'll have to be aware of if you're getting close to that 2,000 shareholder limit. And then lastly, are you considering an IPO anytime soon? Now, an IPO will require, as a fully registered offering, it will require a registered transfer agent. And we've seen situations where companies come to us, they're looking to IPO, they want to take advantage of a market opportunity, but they've got shareholder records from being private that they've kept themselves for many years. They have found, maybe 1,500 investors, and the records are in very poor shape. And sometimes, that alone can delay the ability for that issuer to launch their IPO if their records are not in good order. So if that's something that's coming soon, a company might want to think about whether or not they want to do that record keeping themselves. Next option is a SaaS option. So I said this is the TurboTax equivalent of doing your taxes. So the company is still doing their record keeping, but they're using some software, or they're outsourcing it, but to a non-registered transfer agent. I'll talk about both of these simultaneously, although they're slightly different. So you're either using software or you're outsourcing it, but not to a registered transfer agent. And the same issue applies. If you're raising less than the 20 million, that's fine. You can continue to do it with either of those options, but you still need to consider those same options of data security and business continuity. So if you're using a software product, is it loaded onto your PC? Is that where the data resides? If it's in the cloud, those social security numbers and their protection is as much your responsibility as it is your software provider. So the issuer needs to find out, who is hosting that software, where is that data, what type of protection do they have around it. Similarly, if you're outsourcing it to any third party, even if it's not a registered transfer agent, but someone is taking care of it for you, really need to understand what their data security and business continuity requirements are. If you make a mistake, at least in the SaaS environment, you own it. So you're using a piece of software. If you type in 100,000 shares and you meant to type in 1,000 shares, that's not the software provider's issue, that's your issue. And you have the same legal consequences as when I mentioned earlier. If you were doing it yourself in a spreadsheet, you still have those same problems. If you outsource to a third party, you just need to make sure that your contract properly covers if they make a mistake while record keeping your shareholders. You still have the issue with interacting with investors. So just because you use software doesn't mean you're necessarily going to get around investors having to call you, ask questions. I didn't mention earlier, I should have, I forgot to mention, one of the other responsibilities, if you're using software or if you're record keeping yourself, shares do transfer. People die, I mentioned, but even if there's just an off market, there's no exchange listing, but people can sell to each other, they can give their shares to their children. So there are rules around transfers, there are requirements of how transfers are done, And so all of that, even if you're using software, it's still the issuing company's responsibility to understand all of those rules. Now, the software may have some rules built in, which is good. It may have some of the aspects of cost basis and the date of purchase built in. It may track certificate numbers, but the specific rules around requirements on death, requirements on divorce or custodial, those are not going to be in any software package. And so the company is still going to have to make sure that they are performing those transfers legally properly. The software may or may not have a trigger on the 2,000 shareholder rule to warn you when you're getting close to it. So that still becomes an issuer responsibility. The IPO, your records may be in slightly better shape with a third party or with software, but still be aware if you're IPOing anytime soon, may be better to have a registered transfer agent keep those records. So at the time of the IPO, you can immediately get going and no delay in transferring records. And then the last two topics, they're not here, but I mentioned them earlier, those abandoned property state rules for the escheatment of abandoned property. We've had many private issuers say to us, we're not really concerned about that. We only have 75 investors. We know who they are. They're not abandoned, or their property's not abandoned, so we don't have to deal with escheatment. And what I remind them is each state has very specific requirements on escheatment. And those requirements usually have an onus on the part of the issuer that you have spoken with or communicated with the investor sometime over the abandoned period. They've expressed interest in their property. So if they haven't called you, they haven't sent you anything in writing, they're sitting out there as a passive investor, just because you know who they are as an issuer does not mean that you can say that they've expressed interest over their property. And therefore you may be required to escheat that property, or more likely, there's a pre-escheatment requirement under 17 AD 17 where you mail them a letter and you have to get some communication back from the investor. So even though they know, you know where they are, that's not good enough from an escheatment standpoint. And even if they have communicated, you still need to file with every state for which you have a shareholder and let them know come escheatment time that you have no property to escheat. So even if everyone is in contact with you, they've expressed interest over their property, you still have an obligation to do certain filings. So if you're using software or doing it yourself as an issuer, you need to make sure you're doing that. And if you do decide to make any cash payment, as I mentioned earlier, the SaaS products do not issue checks, they do not issue wires. They will track the investor's bank account if you have that in there. It'll track their address, but you will need to separately cut a check or send a wire or send money ACH. So you have to have the banking wherewithal to do that, the operational requirements to do that. And then you're going to have to key those transactions into the software to record keep that investor in fact received a dividend or other payment. So the SaaS systems don't make the payments, they just record a history of it. Issuers still need to do that. If you're outsourcing to a third party, then they may have that capability to do it. And lastly is outsourcing to a registered transfer agent. These are the SEC registered transfer agents. They can record keep regardless of the dollar amount. So private transactions, public transactions, Reg A plus, Tier 1, Tier 2. These are large financial institutions that are providing this capability. So you can feel fairly comfortable with their data security and business continuity, and they can provide a whole history and background on what their current policies are. If a registered transfer agent makes a mistake, it takes on the negligence liability. Interacting with investors, many registered transfer agents not only have phone centers, but they have portals where investors can log in and see their holdings. They're well versed in legal transfers and all of the requirements for them. And they're also very sophisticated at tracking the 2,000 shareholder limit to make sure as an issuer that you are warned in advance if you're getting close to becoming a reporting company. I mentioned earlier that if an issuer is going to IPO, well, you need a registered transfer agent. So the fact that the records are sitting on the platform, they'll be in good order, and that will not delay the IPO from happening in any way. One thing, though, to keep in mind is registered transfer agents, because they're regulated by the SEC, the SEC sees us as having some fiduciary responsibility, which is outside of the issuer's control. What I mean by that is, if an issuer comes to us and says, you've got a shareholder on your records that we gave you that has 10,000 shares, it really should be 1,000 shares. We cannot go and make that change without first confirming it with the investor. The SEC sees the registered transfer agent as a protector of the small investor. Now, if the company is really trying to do harm to the investor, maybe that investor is an employee, they have an issue with that employee, and they may not have the legal right to do it, so they can't just change the share positions on the register. The registered transfer agent will make sure that the shareholder agrees, or that if there are legal court documents that the company, the issuing company, can provide us to show that we need to make that change, we'll make that change. So that's something that, when you're record keeping yourself, you make the changes yourself. But when you're record keeping through a registered transfer agent, the issuer has to make sure that they understand we are going to require additional backup. If you're changing the outstanding capital, we're going to require the board to sign off. Any instruction we need to have by an authorized signer of the company. So there's an additional protocol when using a third-party registered transfer agent, which is designed to protect the investor. And the last point I'll make is just registering as a transfer agent with the SEC is not enough. We see a host of companies today in the crowdfunding space signing up to become a registered transfer agent with the SEC. And I can assure everyone, the paperwork to doing it is a lot easier than actually doing it itself. It's a fairly complex process. And I would just caution issuers who are looking at providers and saying they're an SEC registered transfer agent. Take a look at how long they've been an SEC registered transfer agent, how many clients they have they been through an SEC audit yet? If they've just signed up recently, that may be a flag that that's not the one you want to necessarily go with. And then I just have this is the final slide, a few questions that any issuer should keep in mind. It's a bit of a summary of the things we've covered and some points to note. The record keeper is not the escrow agent. As part of that Invest Now button I was mentioning earlier, that's usually a third-party provider of the portal. It's not the record keeper. We take the records after they've gone through that process. The record keeper only gets involved once it breaks escrow and the money is exchanged. I mentioned that the transfer agent cannot just change the shareholder records without approval. I also mentioned that the quality of the records may affect the timing of the IPO. If they're not clean from day one, it could take months to get the records from the past 5-10 years, depending on how long they've been private and issuing equity. And you may have multiple rounds, multiple series, and all of that has to be cleaned up before the IPO. Will the portal that helped the investor buy into the stock also want to shadow the record keeper? The record keeper is going to have the primary responsibility for the books and records of the investors, but often the portal wants to maintain at least the balance. So when the investor logs into the portal for the next investment, they think of the portal almost as their account location. And so you just need to keep in mind, does your provider and can your provider shadow with the portal? Does your provider also have the capabilities to handle redemptions? Often investors in private securities, they may have hardship reasons where they need to get out of the stock, but it's not liquid, it's not traded. And so they often will run various types of hardship redemption programs, or even just quarterly redemptions to provide a little bit of liquidity. Anyone who wants to sell during the quarter, anyone who wants to buy during the quarter, express interest, and then the agent will exchange the stock. So keep a note of, if you're doing it yourself, you have to run that redemption. If you're record keeping yourself, you have to run the redemption yourself. If you're using a third party, find out if they have that capability. Just like, do they have the capability to perform any type of a corporate action, a stock split, a reverse split? If you don't want to do it yourself, make sure the third party you're going to hire can do it. And that the board does have to approve, I mentioned earlier, capital changes. We require dual signatures. These are all things that a registered transfer agent under the auspices of the SEC, these are best practices that are employed. And so as an issuer, you just need to be prepared. There'll be a little extra paperwork than you've probably had before. So Scott, that brings me to the end. I will stop there and see if you have any questions, or if anyone on the phone has, or on the webinar has any questions.
Well, while Devin gathers any questions on Q&A, I can definitely say I've learned a lot today, Peter. Thank you for all those details. And I imagine that as fast as we went through all that, if anyone is interested in more information on Peter and Computershare Services, please just reach out, contact at cfpa.org, and we're happy to connect you with Peter, as well as I'm sure he'd be happy to provide you with the slides that we just went through. So quite different than a stock now that you would see implied on crowdfunding platforms. The process of managing investors is both important and obligatory in many instances. So don't take this lightly, folks, because the last thing you want to do is go out and raise money and then realize that you've got more responsibilities to take up afterwards. And especially as it pertains to how we are now starting to see more sophisticated investment vehicles in the crowdfunding space with real estate and others. It's not unlikely to assume that some of these small businesses are not going to be small for long. So it's important that you prepare for success, and that's what the CfPA is here to help you do. And one of those things is to introduce you to companies like Transfer Agents and Peters that will help you prepare for the success. That may not be an IPO, but you're certainly very likely going to have more than 2,000 investors if you have a successful crowdfund offering at least once. And I'm sure Devin could talk to that as well, having seen and interviewed hundreds. And so we hope that sessions like today's will help prepare you for when your crowdfunded business succeeds to a more larger and conventional raise, where investor disclosure, management, and expectations have far greater consequences than they would otherwise. So thank you all for attending. Devin, anything to add to that? You're muted.
No, I have nothing to add. This is great.
Fantastic. Well, thank you, Peter, again, for joining us, and thank you for your past support of the CfPA as well.
Thanks for having me.
Thanks, guys.
Bye.
Cheers.